Hello everyone, today we are going to talk about a very interesting share, Indian Railway Finance Corporation IRFC, which is trading in the stock market at 23 rupees. Well, if you look at all the parameters, it appears to be in green. The intrinsic value, which is the current price, is less than the intrinsic value. PE ratio is 6.82. Stock has been generating better return than bank FD. Good time to consider, as the stock is not in the overbought zone and it doesn't have any red flags as well. Also, the growth score is good. The default probability is extremely less. Also, the analysts have suggested that investors can buy this stock. With market cap of 30,122 crores, it's a mid-cap company. It is specialized in finance. It provides financial services to Indian Railways. The net income is 4,416 crores. The total debt is 3,23,110 crore. The reason for this high debt is because this debt is utilized to manage the operations of Indian Railways, to fund different expansion of Indian Railways. So Indian Railway Finance Corporation, located in New Delhi, is financing arm of Ministry of Railways. So all the finances will come from IRFC. So it has a great future. Over the last 1 month, the returns have been considerably good. But if you look at the overall growth, it shall give a long-term return to the customers. So if you have a long-term planning to buy this stock for 20 to 30 years, it will definitely add value to your portfolio. Again, it depends upon your own assessment, how you want to go forward and take this stock. So if you see the forecast, it's in the positive range. Also, let's quickly look at the financials. The total revenue is increasing. Okay, that's good. Net income has also increased. Earning per share is increasing. Dividend payout is good. And if we look at the balance sheet, the total asset is huge. It's 3,78,051 crores. If we look at the cash flow, it has negative cash flow. Why? Because most of the funds are already invested. Why? Taking loan from different agencies. So this type of institutions, this type of companies will have negative cash flow and huge debt, because that is required for them to go ahead and fund the projects, right? So the dividend yield is quite good. The technical parameters as compared to others is significantly better. Also, if you take a look at the holding, this is extremely good. The promoter holding is 86.36. So this is a positive sign. In the last 6 months, the promoter holding has been the same. So this is quite good. Also, let's look some of the news. Railway share, they are increasing. IRFC garners 500 million through green offshore bonds. That's good. So positive news is there. Cash dividend, if we look, 1.05 rupees per share in 17th February and in November. So around 2 rupees, you can say, cash dividend has been given last year. So that's all about the company analysis, the technical, financial. Now let's quickly look at the presentation which the company has given. Indian Railway Finance Corporation. Now if you look, departmental commercial undertaking of Government of India, which owns and operates Indian Railway Transport. That is a big thing. Administration and policy formulation by Ministry of Railways. So India has the largest rail network in Asia, which is around 67,956 kilometers. There are 7,325 railway stations. with capital expenditure only during this financial year is 20.9 billion. 21,000 trains, million passengers, freight, wagon, coaches, locomotives. This is rolling stock, and this is what is being financed by IRFC. So government focus on infrastructure building. Even in this budget, the government has stressed to put more emphasis on infrastructure. So this is going to be the future. Growth of freight traffic due to industrialization, rising demand for urban mass transportation, improve safety and modernization. So what are the sources of financing? Freight and passenger revenue, budgetary support. So this is how IRFC gets fund. Okay. Extra budgetary resources, borrowing through finance leasing from joint venture, PPP mode, public-private partnership mode. So Indian Railway borrows substantial portion of extra budgetary resources through Indian Railway Finance Corporation, and IRFC share of total capex was 67%. So whatever funds are being utilized by Indian Railways, extra budgetary resources funding is 67%. Right? So the budgetary support 50%, extra budgetary 30%. Okay. Indian Railway borrows 67%, through IRFC, that is the extra budgetary resources. So this is what you can see significantly over the years. So if you look at financial year 2022, extra budgetary resources 8,788 out of 28,000. So around 9,000 from 29,000. So this is how it's been broken. Rolling stock assets, Ministry of Railways. Rolling stocks assets through IRFC. This is given to Ministry of Railways, and then Ministry of Railways to IRFC. Government of India has 86% of ownership. So what happens? Acquisition of rolling stock asset on behalf of IRFC. Okay. The ownership of asset is through IRFC. Now the assets are leased to Ministry of Railways for 30 years. Primary lease period is 15 and secondary lease period is 15 years. So these assets are owned by RFC, and IRFC gives these assets on lease to Ministry of Railways. Lease rentals 6 months in advance. Entire liability of Ministry of Railways is extinguished with the primary lease period. So the best thing about is that Ministry of Railways will have no liability. Nominal amount recovered during the secondary lease period. Okay. Now let's quickly have a look at IRFC overview. It was set up in 1986. Indian Railway Finance Corporation Limited has been the sole financial institution to Ministry of Railways since inception. It has critical role in the Indian government economic development plans. It has integral linkage with government as Government of India, which appoints board of directors. Unique financing arrangement with Government of India. So IRFC loans to Ministry of Railways are extended in the form of finance leases. Okay. So in form of lease, IRFC gives loan to Ministry of Railway. And it is passed through the annual budget, which is approved by the Parliament. So the Government of India commitment is there. Additionally, in the event of issuer does not have sufficient fund to redeem bonds or repay term loans owing to inadequate cash flow during the fiscal year, Ministry of Railways is required under the standard lease agreement to provide for such shortfall. IRFC is notified as a public financial institution under the Companies Act, and it is registered as NBFC, non-deposit taking systematically important NBFC, and is subclassified as NBFC IFC, that is Infrastructure Finance Company as well, with RBI, which provides it with better access to funding in the domestic as well as offshore market. So it is systematically important NBFC, and it is a public financial institution under the Companies Act. So all financial risks such as interest rate risk, exchange rate variation risk, these are passed to the Ministry of Railways. Okay. So strategic role in financing growth of Indian Railways. If you look, route kilometer per million population in 2019 was 49. Also, Ministry of Railway has now increasing dependence on IRFC for financing, which is around 67%. So, strategic role in growth of railways, low risk cost plus model, also strong asset liability management, consistent financial performance, and enjoy regulatory exemptions as well. Key investment highlights of IRFC: low risk business model, fully integrated with Ministry of Railways, government ownership with strategic role in financing growth of Indian Railways, competitive cost of borrowing in diversified source of funding, experienced senior management and committed team, consistent financial performance. Also, the business model is unique, Ministry of Railways and its entities being there the sole client. Financial leasing model, which is a completely new model, 30 years of lease agreement with Ministry of Railways. Also, it is reflected in the union budget, diverse sources from onshore and offshore market. They can use or gather or accumulate, generate more resources through different markets. Consistent cash flow through cost plus model, repayment of lease rentals by Ministry of Railways. So it has notable contribution. Over a third of Indian Railway plan outlay was financed by IRFC. As of 31st March 2020, it funded more than 75% of aggregate rolling stock. It has recently gone into funding of railway projects through institutional finance. Accumulating funding to rail sector crossed 60 billion. Outstanding borrowing is 47.15 billion. This is the management, this is the amount which this IRFC company holds. This funding assistance to other railway entities is also there. Okay. So Ministry of Railway considers IRFC as a central public sector undertaking of strategic importance. So since the government is backing IRFC, this is quite secure. And these are the sources of finance. Through domestic bond 49%, long-term loan 32%, external commercial borrowing. So this is how IRFC has diversified its borrowing profile through different investor base, which allows IRFC to raise funds at one of the lowest possible cost among term lending institutions. So this is the management team. Shri Amitabh Banerjee, Chairman and Managing Director. He has been associated with Konkan Railway Corporation Limited, Hindustan Paper Corporation Limited and Delhi Metro Rail Corporation. He has prior experience in the field of finance, account and general administration, bachelor degree in commerce from University of Delhi and master degree of commerce from University of Delhi. Okay. These are part-time directors, director finance, government director, independent directors. The key financial ratios: profit after tax, total income, loans outstanding, net worth. These are the assets under management. So overall, it's a good company. Also, it is following the green financing norms, which is the future. IRFC Green Financing 2022. Lending targets of 8.7, borrowing targets of 8.7 million, corporate social responsibility. So it's a great company with long-term perspective, and I think investors who are looking forward for investment for a long-term, periodically around 20-30 years, this is definitely a good company to look for.